from an undisclosed location somewhere in the Northern Hemisphere. It's everything Wall Street doesn't want you to know. Everything the financial media won't tell you. Everything mutual fund managers are hiding from you. This is the voice of the underground, the Wall Street Underground.
There's a man who leads a life of danger. To everyone he meets, he stays a stranger.
What are all the mutual fund promises about this bold new future? How come Wall Streeters aren't running for their lives and mutual fund hucksters? Why is no one talking about the $8 trillion they've wiped out?
Secret Asian man, secret Asian man, they've given you a number and digging way on it.
Now, here's the voice of the underground, Maverick International financial analyst, Nick Guarino.
Hello, 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 hello. Welcome to Radio Free Wall Street. This is our 5 o'clock everyday New York time live update on the crap that Wall Street's trying to do to you. And they got a big plan this time. Now, it used to be an exchange was an exchange, and it was kind of a dull place. They were owned by the members, the people that traded on the floor. They weren't stage shows. They weren't for profit. And they were neutral. They were a place where buyer and seller can meet on the floor. And that was where the buyers had an equal playing field with the sellers and vice versa. But that has changed as Wall Street became a for-profit business. The exchanges become these great big conglomerates. They become stage shows, road shows to entice people into the market. And unfortunately, with the volume of trading, something that's been was kind of like the holy grail of trading for brokers was the commissions. And commissions have gone down to virtually nothing. So the question is, you may wonder how Wall Street funds itself. I mean, what pays for all that? Well, there's the road and dog and pony shows. There's the opening ceremonies, the closing ceremonies. But at the heart of Wall Street is that it's changed its model in not making commissions from executing trades, but making commissions from being part of the process. Let me explain to you. The problem we have with the exchanges is that they have information. So they now charge a lot of money to provide quotes, okay? Now, it's not simply the quote. It's the volume. It's the tick volume. It is the number of buy positions, number of sell positions. It's volume. It's bid, ask, offer. It's handling all the various kinds of trades, market orders, market on close. And what's happened is there's another part of this that is the dirty side of the business, and that is the execution. Now, the exchanges are computerized, and they have really super computers, but they offer services to people that can afford it to put their computers right by the exchange computer. Now, the people that locate computers in the computer rooms are obviously the privileged few. Their computers are better, faster, bigger than exchange computers. And in essence, what happens is they are able to execute trades faster than exchanges are. Now, that may not sound anything what happens in microseconds. It's known as latency. There's a whole business of computerized high-frequency trading. And there's a whole lot of games in that high-frequency trading. That ties into dark pools. That ties into how your broker executes your order, who he executes it through, what they do with it, what your fill is. Do you remember the old story about the guy from the Bank of New York who wrote a computer program that said that instead of rounding pennies up or down, all the fractions of pennies in transactions would go into his account? And it was one of the first computer crimes. And what happened was he got caught because the money was piling up so fast in the account, he couldn't get it out fast enough, and it was a crime that didn't hurt anybody. In other words, rather than rounding up or down, that fraction went to his account, and all that added up. Well, we have that game being played on Wall Street right now, which is a large source of the exchange financing, and that's high-frequency trading. High-frequency trading uses very complicated algorithms and executes millions of trades in a split second. Now, these are very complicated mathematical formulas. In fact, the most popular Wall Street guy anymore is not a broker, but the mathematicians. And the mathematicians are ruling the game. Now, this doesn't just go to high-frequency trading, there's a whole series of trades that go on that involve mathematical models. And they are the ETFs. There's the automated trading where these computer models scan all the news stories. And then they read the story, the financial stories, maybe a company's reporting a fire at a factory. Well, they read it faster than anyone else can, and these all become part of this algo trades, and then you've got the derivatives. So what's happening is it's become a split-second flying circus, literally, run on supercomputers, not run by humans. Now, you heard about the flash crash where the market just kind of plunged for no reason at all. Well, that was basically the computers getting out of control. Now, here's the problem. Mathematicians' view of the world are different than ours. And they like a degree of certainty rather than mavericks like me that love uncertainty. We love the challenge of a changing world, of the unknown, the unforeseen. We have high flexibility. Flexibility is not what's built into mathematical trading models. They're very rigid rules. Now, we are headed for, as we reported to you on this broadcast for a long time now, one of the biggest stock market downturns ever. And just today we published a story about Mark Mobius, another old-time Wall Streeter, warning about a 30% crash. Now, we've been telling you that this crash is going to be the biggest ever. My belief is that in the next stock market wipeout and crash, that will probably end the stock exchanges as we know them. Companies don't have to trade on shares of stocks on exchanges. They can trade on the Internet, and there's all kinds of new and better ways to do this because the systems become corrupt. The concept of high-frequency trading, of people being able basically to front-run trades in a microsecond, speed of light, is a concept that shouldn't be allowed. Okay, we should not have high-frequency trading. We shouldn't have algorithm trading. We shouldn't have all these executions and requests, offer and withdraw, and very complicated strategies that take place at the speed of sound. In fact, the speed of light. And the problem is this. We are headed for a stock market crash. And it's going to be a doozy. But this time, the market is going to plunge and plunge and plunge out of control. They'll close the market, open again, the plunge will continue. And the reason why is the monsters, the algorithms, the high-frequency trading systems will take over, and they are not programmed for what's coming. And that means that what will be a 20% or 30% crash will be an 80 or 90% crash. In fact, the damage will be so severe and so complete, it'll take them weeks to figure out what the final trades are. Exchanges will trade their last hurrah. They will close and never open again. And this is going to be one of the greatest stock market wipeouts ever. And it'll be technology-driven. Now, technology that's new and out of control always ends in disaster. The problem you have with Wall Street is that it's become, because of trading volume, by the way, these guys pay commissions of fractions of pennies per share. And so it's become this enormous casino of not being a market, not being where buyers and sellers meet, but buying computer wars, literally computer games played with algorithms faster than any human mind can calculate. Out of control, beyond the touch of any human. It's like Robbie the robot, on steroids. And the problem is that the market cannot anticipate everything. One of the beauties of the world is the random nature of the universe. The things that are not seen, the things we can't forecast, the things we don't know. We live in a world that, 50 years ago, no one human being could imagine the Facebooks or the online or the Internet or the smartphone. I mean, even the guys that built the smartphone, they were looking for a record-sharing song platform. So what's happened is phone companies didn't understand SMS messaging, okay? Like we've got now in, all these wonderful things like twits. So what's happening is the unknown, the unforeseen. We're headed for a recession. We're headed for a stock market wipeout. But no one knows what the trigger would be. Will it be Donald Trump resigning from office? Will it be him exonerating and declaring martial law, or declaring a nuclear attack, or reaffirming his problem? Who knows what's going to happen in this crazy world we live with these crazy politicians? I can tell you we've got a stock market crisis brewing. We've got an economic crisis and a recession looming large to be a depression. We've got trade wars, nuclear attacks, gas attacks. We've got enemies that are friends and friends that we're making enemies out of. And the whole nature of this thing is the market where buyer and seller meets. But it's no longer a human buyer or seller. It's no longer based on values of stock and what their earnings are going to be. It's all a high-frequency numbers game. How far can we push the bid? What is the tick volume? What's the ask? How many offers and withdrawals of price can we make in price discovery? How fast can we jump in front of a block of trade of large shares coming in there? In other words, a sell order coming in. Well, we're going to beat that to the computer because our computer's faster. Our computer detects that large block of shares of trade. We jump up in front of the trade, and we take advantage of it, scalping the old-fashioned way, but with computers. So the problem is that all these crises are headed to a grand crescendo. We are headed to a breaking point. We are headed to what market crash are made out of. We've had market crash from the 1800s, okay? The stock market has routinely crashed since we started trading it. So it's not an unforeseen event, but here's the difference. We've had some high-frequency trade crashes. We've had some algorithm crashes, but we've never had them all tied into one big event. We've never had so much money tied into markets that are basically mindless trades. They are trades not run by humans. They are trades executing events that are the unknown, the unforeseen, the unpredictable. And the unpredictable is what always wipes out a market. Now, we are headed for a crack up at the end of the runway. We are headed for a stock market that's going to have extreme volume. We are going to head to losses that are unfathomable. You want to know where your money's going? Well, if you're long in this market, it's going to end up in one of those algorithm computers. And you're never going to get your money back. And it's going to end up in panic in Wall Street and values crashing, never to recover. It's going to end in stock exchanges, these big ones. They will close down, bankrupt, flooded with lawsuits in trades they can't reconcile, and money lost in accounting that'll take weeks to undo, in computers that will crash, people that will kill themselves, people that will kill other people. I mean, you're headed for a war on Wall Street, literally. Now, there's a good side of this and a bad side of this, okay, as in all things. It's a blessing, the cursing. The curse is we've built a monster. We have built this market machine that's about to run out of control. We have built valuations in a market in 10 years of endless easing that has caused any sense of rationalization, any sense of value, any sense of control to be completely removed from the market. And we have created mathematical algorithms. We have created trading platforms. We have created high-frequency trading. We've created supercomputers that have never been tested in this thing. We don't know what they're going to do. And we are headed for a crisis. We're headed for a political crisis, obviously. We're headed for an economic one, ditto, a big one. And we are headed with vast amounts of money, more money than ever conceived in the stock market. And when you add leverage, we're having, $900 trillion that eventually crosses some exchange floor somewhere. And the problem is that no longer is savings. No longer is investing. It's a great, big, giant casino created by these trillion-dollar exchanges that have a business model that's based not on a place for buyer and seller to meet, based on promoting a concept, an idea, a dream, wealth, a guarantee of retirement that is not valid. And this, my friends, is where the wipeout's going to occur, right on the exchanges around the world. And the problem is that it's not just a computer in New York. It's going to be one in Germany. It's going to be one in Hong Kong. It's going to be one in financial capitals like London, around the world, in Mexico City even. Because all these computers are tied together. And these exchanges trade the same instruments on their exchange, some of them in different currencies, some of them in different time zones, some of them in different valuations with the same product. And remember, these algorithms, these mathematical models have linked them all together for what's basically computer-based, supercomputer-based arbitrage that takes place in a fraction of a second. Now, the models have never calculated in there a waves of selling. The models have never calculated in there panic. Panic is not something that you can quantify mathematically, even though you think you can because you're a pompous prick. The reality is that panic occurs in different ways. And let me tell you what they haven't calculated in there. They understand the degree of human panic. But we have a phenomenon that's being built into the system. My algorithm friends and my mathematicians, those brilliant ones, you've never considered mathematical panic. You've never considered computer panic. You have never considered the fact that your algorithms are going to collide with the supercomputers and the sell orders are going to be executed and then not executed and then repeated, cancel, replaced millions of times a second in every browse around the world, every stock exchange, in every share of stock. And this is going to lead to panic and meltdown because as the computers panic, the algorithms will panic. The minders of the algorithms will panic as their computers are reporting the imbalances. The imbalances will grow out of control and will not be able to reverse. So we are headed for what will be the end of stock market trading. Now, there is a fortune to be made, and I want to caution you on the sell side. Now, I want to caution you, you're not going to get all your money. Your final end positions as we trade this will be lost in the computers, in the collapse of the system, and what they'll do is they'll settle everyone for zero on that. But with our techniques, getting in there at the beginning of this, what's going to be an incredible wipeout, there is so much money to be made, you're not going to care what happens. Now, I warn you, in the vision I see the future, the stock market is going to go down and stay down and never open again. And as mankind rebuilds, we will go away from stock exchanges. Computerized high-frequency trading will never be allowed again. The algorithms tradings without human execution will not be allowed. Stocks will be trading on the Internet. There won't be these vast exchanges. Buyers and sellers will meet electronically. And it'll be a new way that shares will be issued on the Internet. We will be into crowdsourcing, crowdfunding, and crowd trading, which is the way it should be done. And these huge Wall Street firms doing these road shows and the huge amount of cash thrown at these companies will never happen again. You have companies so ridiculously valued that they can never meet it. And that value will be lost and wiped out forever. We will end up, by the way, with a better system. Of course, it'll take 20 years for it to rebuild itself. And you're going to be into a depression, and you're going to be into losses. You're going to have companies that are going to lose their valuation, lose their source of capital, lose their funding, lose their products, lose their personnel. And many of them will never come back out of the ashes of the destruction that's coming. Now, this is a great curse and a great blessing. See, the problem we've got is that there are many people that believe the stock market can never go down again. There are many people that believe that the days of recessions and depression are over. Seriously. There are many people that believe that because of mathematical controls and mathematical models that losses can be capped, trades running out of control can be stopped by circuit breakers. They actually believe that they can control the model. Now, the problem is that if you've created a 900 trillion overvalued, overleveraged market to the upside, they don't consider the fact that you can create a 900 trillion overvalued, out of control market to the downside. See, you got to remember that the people who write these algorithms, the people who write these trades, the people that are in this high frequency game, are all on the buy side of a market. Okay, the sell side is not considered, because let me tell you, Wall Street is not going to hire algo guys that are writing massive sell positions. Really, really not. Now, they may allow selling, don't get me wrong, but the concept of selling a market into oblivion, the stock market of tomorrow where it loses 80% of its value, is not something that's in its calculations. It's not something they consider possible, and if they consider it possible, they're not allowed to execute it because the people who control them, control the algorithms, fund them, own the computers, get the placement, are all Wall Street creatures of Wall Street. And remember that, the leopard can't see its spots. People who are part of the Wall Street game cannot conceive of a bubble market. They'll mouth it, well, it might be a little bit high, but it'll adjust itself. They can't mouth stock market wipeout. They've seen in the past, and every time we've had a stock market wipeout, they believe that this time we've prevented it. This time we've put in circuit breakers. This time we've put in safeguards. This time we have controls, only to be shocked over and over again. If you ask your broker about a high-frequency depression where stock market goes down and loses 95% of its value, they'll laugh you out of the room. In other words, not only can it not happen, in their mathematical models, in their view of the world, it's not even possible. And if something is regarded by people as not possible, then it's the probable. If someone believes that it can't ever happen, well, that's the very thing that does happen. Why? Well, the nature of shocks, the nature of stock market crises are the improbable, the impossible, the unforeseen. If markets foresee events, they normally can price them in. If markets see a meltdown, see algorithm trading going bad, high frequencies coming apart, computers on the exchanges freezing up and unable to process orders running wild on exchanges around the world, well, it's a model that hasn't been executed. In other words, we don't know what happens. See, these algorithm computers, high-frequency computers, are programmed that if they can't execute in New York, well, they'll execute in London, or they'll execute in Germany, or they'll execute on all the secondary platforms around the world. The secondary platform computers are designed to take that up, do the arbitrage, take the difference between the buy-sell bid and ask, and the buy-sell and what the high-frequency trade is telling them is the direction of the market, and execute it. The problem is that the system does not consider a meltdown in all exchanges in all markets at the same time. Now, with 24-hour trading, with markets that never sleep, with computers that are running amok out of control, there is no keeper in the zoo. There is no one in the insane asylum, okay? The crazies are running the show. And you've got this unique situation that's developing, and that is an incredibly overvalued stock market with 10 years of basically an up market, with buyers and sellers not meeting in the exchanges, but at the tip of a computer that's trading billions of transactions at the speed of light. You have markets that do not have any system to allow for the impossible, okay, and the improbable. Because remember that mathematics is a system of probabilities and certainties that mathematical formulas calculate. Mathematical formulas can't calculate the impossible. They can't calculate the vague. They can't calculate the unforeseen, okay? The machine learning can't learn that fast. Now, when the markets crash, and in the weeks and months it'll take to settle the orders and all that, there will be a post-mortem, but it'll be too late, and I'll tell you why. Trillions and trillions of dollars, hundreds of trillions of dollars are about to be wiped out. And we're in a situation where the money will be lost and never returned. We're in a situation where the markets will close and never open again. We're in a situation where valuation got out the window. I mean, if you talk to anyone that's a veteran of Wall Street, you can say, look, there's no true measure of value here. It's a publicity stunt. It's PR. You know, you've heard about the herd mentality, the heat. You know, that's a market. And we have a market driven by nothing but herd instincts. We have a market that's not driven by anything but greed unbridled. We have a market that's not being guided by fundamentals, that's not guided by valuations. It's not guided by any sense of what value should be. It's all about the direction. It's all about the high frequency. It's all about the algorithm. It's all about the calculation. It's all about the computer zipping out the orders. And we are now headed to the time of greatest uncertainty. I mean, we have a president that we should say is maybe unorthodox. We have a war going on the political front. We have a budget that is out of control. We have deficits that are soaring faster than anything anyone has seen. We have a roll the dice tax bill that was based on the belief that if we gave, an unproven theory I might add, that if we gave massive tax breaks in the tune of trillions of dollars to billion-dollar individuals and entities, they would take that money and they would invest it, and then you would end up collecting more taxes, employing more people, having higher pay. Now, that theory has been around for a long time and never been proven. As we are seeing now that if that was going to happen, let's suppose people said, yeah, you're right. We've got this money. We believe in America, make America great again. Do you honestly think a corporation watching the crazy shit going on in Washington, D.C., watching the crazy shit with Stormy, the best-looking whores in the world, according to Putin, gas attacks, sanctions, trade wars, is this a marketplace that you would think a responsible, cold and calculating business person that controls billions of dollars is going to invest in? Really, really, really? Do you really think that? The answer is that at the very least, prudence would dictate that, well, let's stay in a buy and see if this stormy weather passes by. Let's look and see if there's Fox News, no Putin, and no collusion, or maybe there's something more. Let's stand aside and let's see what the next government is going to be. I mean, are we going to end up with a bunch of liberal Democrats with an anti-business, higher tax orientation? We have a Federal Reserve that has decided, bullshit. There's too much stimulus. We are raising rates. We're getting to 3% Fed fund rates. We're going to raise rates 4 times this year. We have a Federal Reserve that says, you know what? We've put $10 trillion in the quantum easing into the market. We're withdrawing that. We're taking that. We're cashing out that debt. We're getting out of the easing business. Or we have corporations that are saying, we are moving our call centers. We are moving our factories overseas because guess what? Under the tax bill, we pay no taxes if we move a factory overseas. We pay no taxes on those earnings. I'm really. In other words, what they haven't told you is that they wrote the tax bill so fast and with so many lobbyists that they put provisions in there that are anti-bring the factory home. They were anti-bring the jobs in America. They were anti-making America great again. Reality is reality. And certainty is certainty. And uncertainty is uncertainty. And chaos is chaos. Now, to believe that you can mathematically predict chaos theory is ridiculous. By the very fact that you're getting chaos and you're quantifying it mathematically means it's no longer chaos. It now has a mathematical beginning, has a mathematical end, and it has a sum total and a conclusion. That then removes the random nature of the universe. That removes the unseen. See, in order for algorithm and high-frequency trading to really, truly work, listen to me, really, you have to have 3 things. 1, you've got to have the fastest, smartest computer in the world and the best algorithm. 2, you have to have predictability. You have to really know what's going to happen. And 3, you can have no uncertainty. You have to make sure that in your algorithm, in your model, that all possibilities, no matter how remote, all potential scenarios are calculated in there. And listen, my Wall Street genius prick mathematician, only person who can do that is God, and God doesn't trade. And here's another newsflash. I know that you regard the rest of the world as stupid shits and you laugh at us. But the problem is you are not as smart as you think you are. Your algorithm is not as smart as you think you are. And there's a God up there, and you're going to learn the lesson of your life. Because let me tell you something about the high and mighty. They always, there's something about the mighty. There's something about the people who believe they're infallible. God's got to screw with them. I mean, God's got a sense of humor. And you go, oh, really? You know all are great? Well, let me throw you a curveball you never considered. And the very random nature of life in the universe, the very movement of masses of people, the very strifes that we see mean that there is the unforeseen. And the unforeseen and the unknowable is the enemy of the foreseen and the knowable. So if you have calculated the unknowable, it's now knowable. And if you have seen the unforeseen, it's now seen. And the problem is, that sounds nice, and you can do that in the conference tables, and you can demonstrate how you've made a return in this crisis and that crisis, and you can backwards model and generate how it's going to work. The problem is, it's never the same. The timing's different. The event's different. The logistics are different. The frequency is different. And this is the tragedy we're headed for. We're headed for a bunch of pompous pricks with their mathematical models that believe they've calculated in the calculable. And there's nothing that they can't calculate. And reality is, and it's the quirk of nature, they will always find a new twist. They'll always find a new way. They'll always find a new wipeout. And they'll always find a new way to make you very humble. So humility is coming to my mathematical friends both at the Federal Reserve, at the Treasury Department, and especially on Wall Street. They have spent a fortune in people that think that they know everything. These are very gifted people, geniuses from birth. They've been told how great they are. They've been told how perfect they are, and they believe it. And they've got these egos that are just going to the moon. You know, see, when you sit in a restaurant and you laugh at the waitress because she's stupid, that's okay. But what you don't realize is that very, very, very smart people you haven't met, very, very smart people from a different orientation, and we're laying for you. We have discovered the chink in your armor. We have discovered the floor because we know we don't know everything. We know that we don't know the incalculable. But we know that we can adjust with flexibility because we don't have a mathematical model. We don't have a rigid decision-making process that's removed humans. And we also know the outcome of some of the ugly things we're having here, and we don't believe the bullshit. So, yeah, I don't believe the Federal Reserve or the Treasury or Wall Street super bankers can stop another recession or depression. I don't believe they've calculated in the random nature of the universe. I don't believe they've calculated in all of the options and all the possibilities. I believe these pompous pricks are sitting there with trillions of dollars riding that in their minds has no longer become money. And they've got a mathematical chess game going on that they can't win. So I want to tell you that we are at the verge of a stock market wipeout, which is cyclical in nature, which happens. We're going into a recession and depression, which cannot be avoided. It's in the feast and famine nature of the universe. And I believe we have the greatest number of pompous pricks that cannot believe it's even possible. And I believe that they absolutely believe in their algorithms. They have removed the safety pin from the grenade. They have taken out the airbags and the seatbelts. They have convinced themselves that nothing bad can happen. A wipeout is not in the cards. A recession and depression is something in the old-fashioned days before they were brilliant enough to be in control to stop it. And I propose to you that one of the greatest stock market wipeouts and meltdown in the briefest period of time is about to happen. And I believe that trillions of dollars will change hands in microseconds. And I hope and pray you're smart enough to be on the receiving end, because this is the greatest opportunity for the little guy to get even I've ever seen. And getting even is really cool and fun. And taking money from pompous Wall Street pricks, and I've done it many times, is one of the most glorious feelings you could ever have.
From an undisclosed location somewhere in the Northern Hemisphere, it's everything Wall Street doesn't want you to know, everything the financial media won't tell you, everything mutual fund managers are hiding from you. This is the voice of the underground, the Wall Street Underground.
There's a man who leads a life of danger. To everyone he meets, he stays a stranger.
What are all the mutual fund promises about this bold new future? How come Wall Streeters aren't running for their lives and mutual fund hucksters? Why is no one talking about the $8 trillion they wiped out?
Secret